Australia, the land down under. Famous for its stunning landscapes, laid-back lifestyle, and, of course, its reputation as the lucky country. But what if I told you that behind the sunny facade, Australia is quietly collapsing? From its overpriced real estate market to its addiction to gambling and its reliance on digging dirt out of the ground, Australia is facing a perfect storm of economic and social issues. And the worst part? Most people don't even realize it's happening. So, grab a Vegemite sandwich, sit back, and let's dive into how Australia's quiet collapse is unfolding, and why the rest of the world should be paying attention. Let's start with the good news. On paper, Australia looks like a wealthy nation. According to recent reports, Australians have the second highest median net worth in the world, trailing only Luxembourg. That's right, the average Aussie is richer than the average American. But here's the catch. Wealth in Australia is built on shaky foundations. Sure, Australians have high net worth, but a lot of that wealth is tied up in real estate. Real estate that's so overpriced it makes San Francisco look like a bargain. The average property in Australia costs 8 times the median household income. 8 times. And in cities like Sydney, it's even worse. The rental market is a nightmare, with prices skyrocketing and vacancy rates at record lows. So, while Australians may look wealthy on paper, many are just one bad housing market away from financial ruin. But how did it get this bad? Well, it's a combination of factors. First, there's the issue of supply and demand. Australia's population has been growing rapidly, thanks in part to high levels of immigration. But the housing supply hasn't kept up. In cities like Sydney and Melbourne, there's simply not enough housing to go around, which has driven prices through the roof. Then there's the issue of speculation. Real estate has become a favorite investment for wealthy Australians, thanks to generous tax incentives. High-income earners can use real estate losses to offset their taxes, a practice known as negative gearing. This has turned real estate into a tax haven for the wealthy, driving up prices and making it even harder for average Australians to buy a home. And let's not forget the role of foreign investment. Over 40% of Australia's millionaires were born overseas, and many of them have parked their wealth in Australian real estate. This has further inflated prices, making it even harder for locals to get a foot on the property ladder. So, while Australia may look like a wealthy nation, the reality is that much of that wealth is tied up in an overpriced housing market that's becoming increasingly unaffordable for the average Aussie. Now, let's talk about how Australia got so rich in the first place. Spoiler alert, it's all about dirt. Australia is one of the most resource-rich countries in the world. It's a global leader in exporting natural resources like iron, ore, coal, and gold. But here's the problem. Australia's economy is almost entirely dependent on these exports. In fact, Australia has the lowest economic complexity of any high-income country in the world. That means its economy is based on selling raw materials, not on innovation or advanced manufacturing. And while mining has made Australia wealthy, it's also made the country vulnerable. When commodity prices drop, so does the Australian dollar. And when the dollar drops, so does the wealth of every Australian. It's a classic case of the resource curse, a country that's rich in natural resources but poor in economic diversity. And it's a curse that's starting to catch up with Australia. Take the mining industry, for example. While it's true that mining has brought in billions of dollars in revenue, much of that money has ended up in the hands of foreign mining companies. In fact, Australia's mining sector is dominated by foreign investors, who take a large share of the profits out of the country. And then there's the issue of innovation, or lack thereof. Because Australia's economy is so focused on mining, there's little incentive to invest in other industries like technology or advanced manufacturing. As a result, Australia has fallen behind in these areas, leaving it vulnerable to shifts in global commodity prices. But perhaps the biggest problem is that Australia's reliance on mining has created a kind of economic monoculture. Just like a farmer who plants only one crop, Australia has put all its eggs in one basket. And if that basket fails, the entire economy could come crashing down. Now, let's move on to one of Australia's dirtiest little secrets, its gambling addiction. Australia is the gambling capital of the world. With over 200,000 electronic poker machines, or pokies as they're called, Australians lose nearly $1,000 per person every year on gambling. That's more than any other country. And it's not just pokies. Sports betting, horse racing, and online casinos are all huge industries in Australia. In fact, the average Australian pub is more like a mini casino, complete with rows of pokies and betting terminals. But here's the kicker. While gambling is a booming business, it's also a social disaster. Gambling addiction is rampant, especially among young men, and it's leading to a host of related problems, from financial ruin to petty crime and even violence. And despite public outrage, the government has done little to rein in the industry. Why? Because gambling employs a lot of people and generates a lot of tax revenue. So, for now, the pokies keep spinning and the losses keep piling up. But the real cost of Australia's gambling addiction goes beyond the financial losses. It's tearing apart families, ruining lives, and creating a generation of young people who are trapped in a cycle of debt and despair. And yet, despite all of this, the government continues to turn a blind eye. Why? Because the gambling industry is just too big to fail. It's a classic case of short-term gains leading to long-term pain, and it's a problem that's only going to get worse unless something is done. Now, let's get to the elephant in the room, Australia's real estate market. Housing in Australia is not just expensive, it's absurdly expensive. The average age of a first-time home buyer in Australia is 36, and the fastest-growing group of buyers are those aged 40 to 49. That's right. People are hitting middle age before they can afford their first home. And it's not just young people who are struggling. Many Australians are reaching retirement age still saddled with massive mortgages. In fact, a common strategy is to use retirement savings to pay off the house, just so they can qualify for the government pension. But here's the real kicker. Australia's real estate market is propped up by a tax system that encourages speculation. High-income earners can use real estate losses to offset their taxes, a practice known as negative gearing. This has turned real estate into a tax haven for the wealthy, driving up prices and making it even harder for average Australians to buy a home. And if the housing market ever crashes? Well, let's just say it won't be pretty. The problem is that Australia's economy is so heavily tied to real estate that a housing crash could trigger a full-blown economic crisis. Banks, which are heavily exposed to the housing market, could collapse. Consumer spending, which is already under pressure, could plummet. And the government, which relies on property taxes for a large portion of its revenue, could find itself in serious financial trouble. In short, Australia's real estate market is a ticking time bomb, and when it goes off, the consequences could be catastrophic. Now, let's talk about one of Australia's most impressive financial tools, superannuation. Superannuation is a mandatory retirement savings system that requires employers to contribute a portion of their employees' salaries into a retirement fund. It's a great idea in theory, and it's helped Australians build some of the largest retirement savings in the world. But here's the problem. Superannuation has become a victim of its own success. With over $2 trillion in assets, the system has outgrown Australia's investment market. As a result, much of that money is being invested overseas, particularly in the U.S. stock market. And while that might sound like a good way to diversify risk, it also means that Australia is effectively exporting its wealth. Instead of using that money to build businesses and create jobs at home, Australians are investing in foreign markets, particularly in tech giants like Apple and Amazon. It's a classic case of putting all your eggs in someone else's basket, and it's a strategy that could backfire if global markets take a downer. But the real issue with superannuation is that it's not doing enough to address the underlying problems in Australia's economy. While it's true that Australians have a lot of money saved for retirement, that money won't go very far if the cost of living continues to rise and wages continue to stagnate. In fact, many Australians are using their superannuation savings to pay off their mortgages, effectively transferring their retirement savings into real estate equity. While this might help them qualify for the government pension, it's not exactly a sustainable long-term solution. So, while superannuation is a great idea in theory, it's not enough to solve Australia's deeper economic problems. And unless those problems are addressed, the country's quiet collapse will only continue. So, where does all of this leave Australia? The truth is, Australia is living on borrowed time. Its wealth is built on a fragile foundation of overpriced real estate, a resource-dependent economy, and a gambling industry that's spiraling out of control. And while the country has managed to keep things afloat so far, the cracks are starting to show. Wages are stagnating, debt is rising, and the cost of living is becoming unbearable for many Australians. But perhaps the biggest problem is that no one wants to admit there's a problem. Politicians are too afraid to rock the boat, and the public is too distracted by the illusion of wealth to see the writing on the wall. So, while Australia may still look like the lucky country, its luck is running out. And when it does, the collapse could be anything but quiet. Australia is a beautiful country with a lot to offer. But unless it addresses the deep structural issues that are quietly undermining its economy, the lucky country could soon become the broken country. So what do you think? Is Australia headed for a quiet collapse, or can it turn things around? Let me know in the comments below. Thanks for watching, and I'll see you in the next video.